Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to talk about the quarterly report for the Walt Disney, which released its second quarter earnings report back in May. If we look at its report carefully, we have seen that its earnings for the second quarter were quite disappointing. Not only because its EPS is in negative, it's showing loss in the bottom line, but also because if you analyze the results carefully, there has been decrease in most of the parameters. Its average revenues, which are generated through the various streams it has. It is a diversified business in the entertainment space. It operates streaming businesses, which are two different platforms. It is also present in the theme park segment. It is also there in the TV segment. So, if you consider these various segments one by one, you will see that the streaming business is not doing so well. Its metrics on most of the parameters are pointing downward. Its average revenues were lower, and it is yet to turn profitable. But still, if you consider the forward guidance, the Walt Disney is a bit confident that it is going to be in a positive territory by the end of the year, and that profitability is likely to improve. But then, if you look at the current results, that are not looking so promising. So, there is this contrast that the company is confident in its forward guidance that it's likely to turn profitable. But if you look at these current metrics, which are pointing downward, then that creates kind of confusion in the minds of the investors, in the minds of market participants, and that is what we are witnessing in the market in past 2 months. Since the release of earnings report, we have seen the Walt Disney stock spiraling downward. It is almost lower by more than 20 percentage point from where it was prior to the earnings, and even in today's trading session it is trading lower. So I feel till we get next report, which is due in the first week of August, we are not really likely to see any uptake in the pricing of the shares of Walt Disney. So let us now go into the details of these quarters, that is second quarters, which ended on the March 30th, 2024. The revenues are not very different from the prior year. There is an increase of around 200 million, which amounts to around 1 percentage point increase in the total revenue for the company. But then the cost and expenses haven't changed much. There is slight improvement in the efficiency of the operations as cost and expenses have declined marginally from US dollar 19.54 billion to US dollar 19.20 billion. But there is one another important point which is taking away these chunk of revenues, that is restructuring and impairment charges, which is significantly higher this time around, and that is one key factor why we are seeing the bottom line in red for the Walt Disney, as it has taken away US dollar 2.05 billion in comparison to just 152 million a year back. Then there are not many differences in comparison to the prior year. The equity in the income of investees is on the similar footing. The interest expenses net are not really that different. The other income is absent in comparison to 149 million last time around. So all in all, we have the income before income taxes amounting to US dollar 657 million, and that is being then diluted by the income taxes of 441 million, leaving only 216 million for the net income. Out of that, another 236 million is being taken away. And here we have this net loss of 20 million attributable to the Walt Disney Company. But if we even overlook this fact that this time around, that is for the last quarter, company has made losses. But Walt Disney is a quite a profitable business. It is likely to bounce back. The real concern is not that. I think the falling parameters of the subscriber related factors is weighing down on the investor's mind, where we are seeing this loss of confidence in the ability of these streaming platforms to attract newer users and at the same time contribute to the higher average revenues per user. That is not really happening. We don't really have any strong subscriber growth in the streaming business, and there is also absence of increase in the per user revenue, and that is why I feel most of the market participants have turned negative on the outlook of the Walt Disney. But still, we have the forward guidance of the company, which is pointing on the northern side. If we want to believe that in that, I feel whenever there is some stabilization, there is consolidation, we can indeed look for newer investment opportunity. But prior to that, let us also consider what is happening on the cash front, how the company is generating cash and where it is being utilized. From the operating activity, it generated US dollar 5.85 billion in comparison to just US dollar 2.2 billion a year back. That is a significant increase this time around, and that is being achieved by this cash inflow from the goodwill impairment, and another big contributor has been net changes in the produced and licensed content cost and advances. Then if we consider the investment activity, there is not much difference. The investment in parks and resorts and other properties have taken away US dollar 2.5 billion, which is more or less on the similar footing. Financing activity, there has been acquisition of the redeemable non-controlling interest that has impacted the cash flows quite significantly. There has been net outflow of $8.6 billion for these acquisitions, and that has resulted in the net cash outflow from the financing activity amounting to $10.82 billion. Overall, that has reduced the cash pile, that is cash and cash equivalents at hand, which were at the beginning at $14.23 billion, and as we have this decline of $7.5 billion, there is $6.7 billion left at the end of the period, which is lower if we compare it a year back when the company had $10.45 billion at it at the end of the period ending April 1st, 2023. Now let us go to the technical side of the story. This is the Walt Disney stock over last few months. If you consider the charting, it achieved its peak in the second half of March when it touched $123.7 per share. From there on, it has declined significantly. It is trading at around 90, with this gap down opening happening in today's trading session. With this, we have seen significant erosion in the market capitalization of the Walt Disney. If you consider its stock price movements since the release of its quarterly report back in May, from there on it has been declining, it has been trading downward, and I feel we are not really likely to see any changes anytime soon. It is likely to take time, and with the next quarterly report due in the first week of August, I feel we will have these next significant development for the company which might turn around the business sentiments. But till that, I'm not really that hopeful for any turnaround immediately. We will have to wait and see how things turn out over next few weeks before we can think about any further investment on the long side, because I feel it is still too early to say that this decline is coming to an end and we are likely to see uptick, we are likely to see any changes. If you feel you can also profit from this downward spiral, then I feel that adopting a sell on rally approach is going to be a prudent thing to do. But looking at the current charting, the Walt Disney stock is sitting at the very bottom, so adopting a rally approach is not really likely to yield results immediately, as we will have to allow it to bounce back and then consolidate before we can think about a new trade on these time frame. Here we are utilizing day as the candle period that gives us the timeline of medium term. If we have the outlook for next few weeks, I feel the momentum is still bearish. We will have to go with the flow, and that, as I said, will require us to keep our trading outlook bearish. We will have to keep looking for the opportunities to short sell. That means we will have to find the optimum trading opportunities, which are going to come our way if we are patient enough, and that means sitting on the sidelines over next few weeks, allowing it to show some retracement and consolidation afterwards, and then see if its price formation still remains of lower low and lower highs. Now let us see how things are shaping up in the short term. It was consolidating in last week. After that, we have seen this fresh decline, which has taken away significant market capitalization from the Walt Disney's investors. It has declined around 10 percentage point in the span of 1 month only, and it is now sitting at the very top bottom. If you had adopted a sale on rally approach, there was this opportunity back in last week when it was consolidating in the price range of 97 to 98, but that is now behind us, and we will have to give it more time. If it consolidates and holds the ground over next few trading sessions and doesn't really rise past the immediate swing high, which will give us a price formation of lower low and lower high, then I feel we will have a new opportunity coming our way with the price formation still of lower low and lower high, generating us a opportunity to exploit with sell on rally approach. But till then, we will have to remain patient and keep an eye on this price trajectory of the Walt Disney. Now let us change our time horizon to long term. In the outlook is not that bearish here. If you consider the price formation, there was this sharp rally from the level seen in back in October 2023. From there on, the price level rose significantly. There was almost 50 percentage point gain in the span of couple of months. Now those gains have evaporated. We will have to allow this decline to subside first, give it some time for the consolidation to happen, and if then we see that the Walt Disney stock doesn't really decline past immediate swing low of 78, then I feel we will have better opportunity to think about investing from the long term perspective as well. But that's too early to say. It is still like a falling knife, and I would say avoiding a falling knife is the best idea at the current juncture. So it is better to remain on the sidelines. Maybe better opportunities will come our way, but for that we will have to wait and see how things pan out over next few weeks, particularly after the release of third quarter earnings report, which is due in the first week of August. I think it is going to be released on the 7th of August, to be precise. So that's it from my side for today's trading session, where we have considered these price formation over different time horizons, and depending on the time frame, whether you are a short term, long term, or the medium term trader or investors, you can think about these price formations and decide for yourself whether you want to go for a newer trade or to simply sit on the sidelines. So that's it from my side for today's trading session. If you have any query or any idea to discuss, you can write to me in the feedback, and I will be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you.